Hey, good afternoon, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, and it's August 22nd. We got a couple economic news releases today. Sorry for the late reporting here today. It's been kind of a busy day here at the office. But we'll start off with the weekly jobless claims. And last week we had 323,000 people applying for unemployment. The forecast for this week was about 330, and it came up a little bit higher than the forecast at 336. Next one is the Market Flash PMI for the month of August. We had a 53.7 rating, the previous reporting, and for this one came up to a 53.9, so a little bit higher, so it's just good news right there. And then we also got the FHFA Home Price Index for the month of July. So we showed year-over-year appreciation back in June at 7.6, and July came up a little bit to 7.7. So far improvement in the Market Flash PMI and FHFA home price, so good news right there. Only negative would be the weekly jobless claims. And last but not least, we got the leading indicators. This kind of gives us a forecast of what's going to happen towards future orders and everything. And we had a zero in month of June. In July, we had a forecast of 0.5% growth, and it came at 0.6% growth. So a little bit better indicators for the month of July. So overall, pretty good. Pretty good here, numbers besides the weekly jobless claims. So let's jump over to the headline news here and see how the stock market fared, and everything went upwards. We had the Dow broke its losing streak and closed upwards today, as well as the Nasdaq and S&P. And part of it was the data that we just discussed, and then we also had some other overseas stuff like German PMI showed improvement, and then China productivity or production out of China had some improvement. So some good numbers on a global scale here. So let's go ahead and jump over, see what the bond market's doing with the interest rates. So as you saw, after we had the FOMC minutes released yesterday, it was a lot of mixed information. There's people that think that it's okay to start before the year end. There are people that think that there's not enough data to support that maybe we should hang in there. So there's really nothing to conclude that we'll definitely have tapering starting in the September, which is about 2 weeks from now, their next meeting. Now, today, as you see the green, we start off lower for most of the day, but we did close up a little bit higher than where we left off yesterday. So what that means is we had a slight improvement in our pricing for the interest rates today, but we had a pretty big drop yesterday, down to 90. So right now we're down to 98.63, where we started off almost 98.5 or 99.5 yesterday. So pretty big drop yesterday. So we had a slight rebound today. We'll have to kind of wait and see what tomorrow brings. But again, slight improvement. All right, folks, thanks for watching. I hope you guys have a wonderful day, and we will see you guys tomorrow.